Hello, everyone. Welcome to today's webinar, Wealth Management Strategies for U.S. Expats Living in the EU. My name is Jacob Shelton. I'm an international financial advisor with Holborn Assets. I specialize in helping American expats navigate the complexities of cross-border finance, tax compliance, and long-term wealth planning. I've been a financial advisor for a little over a decade, mostly back in the U.S., in Portland, Oregon, where I'm originally from, working for firms such as Morgan Stanley and JP Morgan. I know it's always confusing with two Morgans in there. I also have my master's in finance from the University of Arizona. Like I just said, I live in Valencia, Spain. So I've been through the same moving process as many of you that are already here, and certainly those who are looking to make the move without having prior European citizenship, which certainly can make the process a whole lot easier. But if you've either recently relocated or have been living in the EU for years, today's session is designed to give you actionable insights to protect and grow your wealth while living abroad. Below, you'll find a button in order to submit a question for the Q&A session at the end of the presentation today. However, there have been so many questions already that were submitted beforehand, and I want to try to answer as many as possible. But I might not get to yours. I already see one question right and early in the presentation, but I have shortened the presentation a little bit more than normal to allow for the multitude of questions that I've already received. I can't have the webinar going for too long, but some of these were even just simply people who had too many questions for the given character limit. So there's also going to be a QR code during that Q&A session with a link to book a free consultation directly into my calendar. And so that way we can talk one-on-one and go over your situation and see if there's maybe something further that I can do for you. The presentation will also be recorded and posted on the Holborn YouTube page. So I'll make sure that everyone who registered will be sent a link if you need to refer back to that. But let's go ahead and jump in. So living abroad is incredible, and we absolutely love it, but it opens up some incredible opportunities, but it also introduces a little complexity into your life, particularly on the financial side. As a US citizen in the EU, you're subject to two regulatory systems, two tax regimes, and often limited access to familiar financial products. Now, one note on this presentation is that it's not country specific. I do quite a few country specific presentations as well the month. So please send me an email if you'd like a schedule of the next webinar for your particular country. But most of these are things that are going to be true no matter which country you reside in. One big one for US citizens is that you most likely don't have access to the previous financial advisor that you used back in the States now that you're a permanent resident in the EU. You are unable to take advantage of the various country-specific products that non-US expats can take advantage of. And of course, big challenge this year that we've seen for US expats is the exchange rate risk. We've dropped a little over 15% since the dollar high against the euro in January, and that continues to be a big risk for people who are already living here or buying property here from the States, or who simply hold all of their investments in the US dollar and are living now in the euro. Now, one other huge challenge, I would say, for many expats, particularly when they're moving here, is the banking and investment environment. So in the EU, financial regulation varies country by country, but most US-based products, like mutual funds, are a great example, are restricted at minimum because of FATCA requirements and what we call MiFID. MiFID is a EU investment regulator who requires different disclosures to be given for US citizens. And so there are still solutions to this, of course, working with a MiFID regulated advisor, such as Holborn, and so that we can really help make sure that you still can stay compliant, both here in the EU and the US. Although mutual funds are restricted, there are different solutions such as ETFs that we're still able to use as long as you're working with the correct advisor, which is why working with a regulated advisor in your country of residence is critical. So we help clients navigate these limitations and identify compliant, high quality alternatives to maybe what you're used to seeing in the States. But as we identify these these alternatives, we need to be hyper aware to avoid PFICs or passive foreign investment companies. Think like a foreign mutual fund or ETF. The IRS taxes these at a much higher rate and can be extremely high tax filing costs with your CPA if you have any of these in your portfolio. So it's not just about growing the wealth, it's also about protecting it. We need to comply with IRS reporting requirements like FATCA and FBAR. And then we also have different reporting requirements now that we're living here in the EU. A great example of that is the Spanish Modelo 720, where we have to list all of our assets back in the States and still report on those potentially each position, depending on your tax advisor's requirements. And penalties for non-compliance of that can be pretty severe on either side of the ocean. And one great example of this that many US expats, as we see this huge influx move over to France, Spain, Portugal, Italy. France is notorious for not recognizing US trusts and really penalizing this. And the reporting requirements for US trusts, if you do have one that you can't necessarily get rid of before moving to France, is pretty intense, and it comes with a higher tax rate. And so these different types of reporting requirements are certainly something to think about before you might make the move, or how do you address them now that you might already be here? Ooh, jumped ahead. Like I mentioned, I'm trying to shorten this presentation just a little bit so that we can make sure to leave time for plenty of questions. Now, fortunately, the US has tax treaties with, I would say, the vast majority of EU countries to help avoid double taxation. So once you make the move, you may be eligible for foreign tax credits, foreign housing credits, foreign earned income exclusion, and or treaty-based exemptions. One good example of that is for US citizens living in France. If they're living off of investment income, that's just taxed back in the States, which is different than, let's say, Spain, where you are taxed in Spain on that investment income. And then you get that foreign tax credit that you take back to the States when you file your 1040s there. Out of those things I just listed, one thing to think about is for that foreign earned income exclusion. You won't be able, if you don't show any type of earned income in the US, to contribute to a retirement plan. So that's certainly something that some of my clients might not necessarily take the full amount. Of course, if you're over that foreign earned income exclusion limit, you can contribute based upon that amount. So certainly something to think about. Now, something to additional to think about as you make that move is many countries in the EU have different investment programs that are extremely specific to that country. Now, as US citizens, most of the time, we are unable to utilize those particular programs. Now, there is a bill on the floor of Congress, right, that would change taxation from taxation by citizenship to taxation by residency. At that point in time, we would be able to really switch over to these types of programs, which would be extremely beneficial compared to the essentially just a brokerage account that we have access to now, although we have some other strategies that we can employ to help save on taxes. But it's certainly something to think about and potentially prepare for as that bill might progress through Congress, is how do we structure our investments to be most tax efficient as possible. Now, again, I hate to keep harping on currency, although I'm going to a few more times during this presentation, as it has been such a hot button topic. But currency diversification within your investment strategy can certainly be a great tool, particularly as your income producing investments might be more focused in euro, and your long-term growth might be more focused in the US. I help a lot of clients put that together. But at the end of the day, one large component as we go and construct your potential portfolio is risk. We want to make sure that any portfolio that we put together is going to fit your risk level at a personal level, whether that be your time horizon before you need those funds, your comfortability with moving funds either to the EU, or, as I've seen more and more often, is your comfortability with leaving funds in the US. And do we need to move those out of the US? And so we really, or are we growing these assets, or are we income focused? And so we really want to make sure that we are responding to what you're telling us, and so that we're able to provide you with the best advice possible on a personalized level. Now, what did I just say? I was going to come back to currency risk, as it can be such a big thing. Now, one thing in the EU that many Americans don't necessarily think about is how long it can take to buy a house. It can take in France, Italy, Spain, Portugal, 6 months, and that's a fairly normal time frame. Not necessarily to build the house, because that can take much longer. As many of my teammates know who built a house here recently, I think one has just hit over the year and a half mark. But as we have these large expenses, maybe we have all of our investments in the US. How do we make sure that as the dollar continues to drop, that we get the amount of euros out of those dollars that we're really expecting, so that it doesn't all of a sudden fall outside of our price range? And the best way to do this is through a forward contract. A forward contract locks that exchange rate for up to a year. And so that there is no surprises as far as if there's another tariff program that's implemented and all of a sudden the dollar drops. We're already going to be seeing interest rate changes. We're expecting 2 more before the end of the year, 1 more in January. That's going to devalue the dollar. And so we want to make sure that if you have a property purchase coming up, that we hedge at least 50% of that cash to close that you will need to buy that property with a forward contract. And so we don't necessarily do that as a company. However, we have partnered with Smart Currency Exchange to be able to provide this service for our clients, and it's been incredibly useful. I mean, I had some clients back in February set up this forward contract for a house that just closed a month ago. And you can imagine, right? They saved 10% US dollars on this purchase. It was huge for them. And so that can be 10% gain on an investment portfolio is a great risk adjusted return, but 10% savings on a property is also pretty amazing. Now, it's not just currency that we speak about when we're building a globally diversified portfolio. We have opportunities all over the world, as we've seen these different markets ebb and flow based upon what's happening in that local economy, but also on a global perspective. We have certainly seen developing countries that have been growing, and we think with access to technology that these economies will continue to grow, even as the Europe has provided outsized growth for their historical averages this year. And we think certain countries within Europe, namely Germany, Spain, even Greece, have increased their GDP growth. Spain was at 19% last year, where historically they're closer to 4 or 5%. And so as we kind of take a look at this overall picture, right, there's going to be winners and losers, of course, throughout, particularly with the turmoil that we've seen globally. But by keeping this globally diversified portfolio, we're not putting any type of risk in one area or another, particularly as we will see how different things shake out globally. Now, this is certainly something that is for expats, can potentially be a hard pill to swallow. I work with people who have had advisors for 30 plus years. who have managed their investments and been able to grow them, and then all of a sudden they want to move abroad, and all of a sudden that advisor can't work with them anymore. And that's really where we come in. I hate to break up relationships. I always like to actually get on a group call with that previous advisor, make sure that that plan that they had created for their client is continually working, and to ensure a smooth handoff. Um, but that ends up being a reality for many expats, is that they aren't able to use their previous institution or their previous advisor. And so that can be a big change. Now, one other opportunity, something that I've had a request for more often than I really ever have in my career, is to move assets offshore. So that's certainly something that we do. We partner with multiple different companies to do so. And it ends up acting as a US based brokerage account, still having access to global investments and funds while holding it outside of the US jurisdiction. That can certainly present some complications depending on the country that you're going to be residing in. So it's not necessarily right for everyone, but it's definitely something to think about. And that is just on the taxable side, because to keep these US retirement accounts and to keep that tax-free growth structure, whether that be in a Roth IRA, a 457, a traditional IRA, 401k, 403b, right? This whole alphabet soup that we have as Americans for retirement accounts. We need to keep that at least structured within the states. Now, there are certainly some strategies to be able to move those funds outside of the US while keeping them within the US. And now that doesn't make any sense, right? But it's through a self-directed IRA LLC. And that does open the door for some particular investments outside of the US under this LLC structure. You might have heard of it as a checkbook IRA. We have a team that we work with of attorneys in the United States to set that up. And so that way the business is still in the US, even while the assets might be working for you outside of the States. So certainly something, again, might not necessarily be right for everyone, but I have had 3 questions before the session today to ask if we can move US retirement accounts outside of the States. And so that is, I think, a hot button topic right now, with potentially some fear of the dollar devaluing, or political fears that people have been wanting to move more assets outside of the States. And that's certainly one way to do so with retirement assets. Again, not for everyone, but we can really help guide through those strategies, as well as different rollover options, distribution strategies, look at some cross-border tax implications so that you can make informed decisions that support your lifestyle and legacy. Now, as far as legacy goes, the estate planning is also a pretty big potential issue that you can run into as you make the move abroad. Now, if you're making the move to Portugal, no inheritance tax. It certainly makes things easier than if you're moving to France with up to 44% inheritance tax. And you want to make sure that your beneficiaries really receive the max amount that they can after tax. And so there's really some big decisions that need to be made as you're thinking about these long-term plans. I mentioned trust earlier. Many EU countries don't recognize trust. And so that's certainly something that if you have I should say revocable trust, right? Irrevocable trust, most EU countries do recognize to some extent, but even as a beneficiary, that creates extra implications that you might not have necessarily thought about, that you might want to speak with either a local tax expert, of which we work with many throughout the EU, or even your US estate planning attorney, to see if that's going to still be in your best interest. So when we work with these local estate planning attorneys, we want to help draft cross-border wills that are going to be compliant in both jurisdictions, and just minimize the overall estate tax exposure and really think if your family's not going to be in the same country as you, right? What does that mean for them as well? Whether they're still back in the States or if they're in another international country. So what does Holborn do, right? We are a global wealth advisory company that focuses on expats. As really the token US advisor, I really help on for exactly what we're speaking about today, right? Is helping US expats that are moving into the EU or who live here already. In order to do that, we offer the financial planning side, the investment management tailored to these international portfolios. We work with your tax advisors as well as both internationally, but also back in the States. And then again, we work on that retirement and potentially estate planning as well, working with the different professionals that they specialize in. So to really get things kicked off, if you are in need of our services, please reach out. The QR code will be on the screen here in just a minute as we're going through that question and answer session, which it looks like I left plenty of time for. And we can really personalize, your situation, your advice to make sure that you're really getting the best advice possible and working with the best professionals possible. Um, Perfect. Well, thanks everyone for joining today's webinar. One little piece, because you probably see two QR codes on your screen and you're like, Jacob was the only one speaking today. What's going on with this other one? I had so many questions about the Portuguese golden visa on these pre-questions that is not my specialty, although Holborn is the leading provider in the world. I believe we're currently nominated for that in the International Investment Awards. And Jason Swan is the go-to guy at Holborn, does more Portuguese golden visas than anyone in the world. And so he's going to be the man to ask with all of those particular questions. I'll tackle the few that I did see, but for details, he is going to be the guy. But as far as my link, it is directly into my calendar with updated availability. I know that with many US clients, as they're still living in the US, my afternoons book up a little bit with that time difference, but certainly happy to make sure something works that will fit you. But yeah, if you want to have a conversation and we can discuss your individual situation, please go ahead and use that QR code. But I am going to head and start taking some of these questions. Okay. Do you handle financial and tax services support in Europe, France for US, and the US, or just one? We handle the financial services portion, and then we work with your tax advisors in either location. Typically, I find that you do need, I do have a few different tax advisors that can work in multiple jurisdictions. I will say that they typically end up being a little bit more expensive than even just paying two different people to do so. But depending on the complexity of your situation, it certainly can be worth that. And so happy to go ahead and book in and we can dive into what's going to fit best for you. All right, next, I have a trust account in the US. How and when does that need to be addressed when moving to Portugal? Portugal really doesn't see trusts. And so it can be, depending on the type of trust that you have and the income that you're drawing off of that trust, are you simply holding assets with that trust? Is it a spousal remainder trust? That there's all of these sorts of particular trust related questions that I would need to know a little bit more details as far as what it actually, how Portugal will view it. If it's something that you're going to be getting continual income off of, it might not necessarily make sense, particularly if it's rental income, where Portugal has that flat 28% tax rate on rental that you can elect for, as opposed to going through the Portuguese progressive income tax rates, which is the other potential election. And if you're taking it from the trust, they're going to be looking at the progressive income tax rates, which get much higher than that 28%. So certainly something to think about on both sides there. Okay. Are there any specific issues for Switzerland to be aware of? Well, I mean, the first and foremost one is, the Swiss franc. It's been holding strong even above the euro, pound, or particularly US dollar this year. It's getting more expensive for US expats to live there, as well as their tax regime, thinking about foreign capital gains tax, where you're going to essentially owe back in the US for that and not necessarily in Switzerland. So that's certainly something to think about there. Um, heirs in the US would get a 44% inheritance tax from an expat passing away in France residency. Yes and no. So that is the top inheritance tax rate from France. They do tax if you are a French tax resident. That is what they're going to be looking at, not necessarily where your heirs are. And so, yes, it's certainly possible. Depending on your relationship with that person, there are certain exemptions, but the exemptions, unless it's a spouse or a direct descendant, can be fairly low. And so, certainly something to think about before you make the move. If you do have the ability to create an irrevocable trust beforehand, that's not necessarily, that you're not the beneficiary of, and you're leaving some of those assets for your heirs. That can be a good strategy. A great one for that can really be doing even a remainder trust, or generational skipping trust, where you can even receive some of that income on an ongoing basis through an annuity, which we are certainly able to help set up and has been helpful for many of our clients, particularly with interest rates still high. So if we're able to get those set up before interest rates continually drop over the next few months, but more so over the next couple of years, it can be much more beneficial for yourself, your income, and then eventually your heirs. So it's definitely something to not leave until we have lower interest rates. By January, we think they're going to be a full percent lower. Next up, can you advise on an expat in Portugal who is the power of attorney for a relative in the US and managing their finances bills? Yes, we certainly can. We would want to look at that power of attorney, make sure that that is up to date and can include Portugal as a jurisdiction and where the relative is living as well. But certainly can. Um, you indicated that for France has a 40% inheritance tax. Do you mean if I live in France and my parents died that I would pay 40% on the inheritance amount? Or did you mean that if I had children in the US and I was leaving money in my will to them, that France would tax deduct 40% of my estate, leaving them with less? Yes, it is both. So that's France is real tough on inheritance taxes. If it's a small family, right, we can do joint ownership of some of those assets, depending on your relationship with your family, and so that can be a way to get around some of that. Again, with either from parents or to your children, there are exemption limits where you would not pay any type of inheritance tax on that, as well as a slightly lower rate. So certainly something to speak with a French tax attorney on. We typically partner with Lexity, who has been a great partner, extremely cost effective and knowledgeable. They get back to clients very quickly, which is rare in France for tax attorneys, as long as you aren't messaging them right around that tax filing date. But yeah, happy to make an introduction to them. They work great. Let me go ahead and tackle some of these that I had gotten beforehand. I know I still see them coming in, and I'll make sure to try to get to those. How to keep assets in my brokerage account After relocating to Portugal, broker said if I move, they will have to close account. Yeah, that's extremely common. That's really where we're able to step in and help out. That's something that many expats face, and we're able to make sure that that brokerage account stays open. That you would essentially work with myself as a financial advisor to maintain that account. We would like to be able to live in Portugal for 6 to 9 months per year, but need to keep the tax burden down. Is there any way to do this? Well, if you're living in Portugal for over half the year, you are going to be a Portuguese tax resident. So then at that point, you'll be under the Portuguese tax regime. So there's certainly strategies under that regime to keep your tax burden down. However, it's as you're living there 12 months. There's not going to be a difference between living there 6 months in a day and 12 months as far as taxes go. I'm looking for tax efficient US and Portuguese tax obligations, investments in Europe for US citizens. Well, we certainly have a few, whether that be deferred growth options, particularly as we look at taxable funds, whether that be in a brokerage or a savings account, where we can grow those tax deferred and get essentially less tax when we pull those out. Certainly happy to have that one-on-one conversation. And it has been very effective for many of my US expat clients that are living in Portugal. Any tax advantage if we're going through the golden visa process to citizenship? Not anymore. Golden visa used to be synonymous with NHR or non-habitual tax regime. For Portugal is what I'm assuming the golden visa that we're speaking of is the most common golden visa. Um, Really, the most tax advantaged way that you can go through the golden visa is through that self-directed IRA that I was speaking about earlier. And so that any gains that you're getting on that golden visa are going to be still tax deferred through that retirement account. But that's really only if you aren't going to need those funds in the retirement account to fund your lifestyle through that period. And so it might be something to look at for the right person. But unfortunately, there is not a blanket tax advantage. I actually take that back. The one big tax advantage of the Golden Visa program to get that Portuguese citizenship is you don't have to be a Portuguese tax resident. As long as you maintain the residency requirements of a week a year in Portugal, you can be a U.S. tax resident and solely a U.S. tax resident. And so that's going to be one of the biggest tax advantages of that Portuguese Golden Visa program. If retiring in Germany, how best to transfer Social Security, 401k, income, and savings over to Germany? So this is going to be really advice for any EU country. One, Social Security, you can have them directly deposit it into your European account in euros. The government exchange rate is actually extremely competitive. And I think that can be a great strategy. 401k, like I mentioned earlier, we want to make sure to keep those tax structures in place. And so it might not necessarily make sense to transfer that 401k directly over to Germany. Income, if you're in savings, I would say using a currency service. As I mentioned, we work with a couple. Smart Currency Exchange has great rates. Spartan FX has great rates, particularly for some of these large transfers. I have many clients who use Wise for daily transfers, but they're not as competitive on those large transfers when it can really mean more. And so that's certainly something. Please reach out. Happy to make an introduction to one of those companies for those actual currency services. But the 401k is going to be the trickier one to move. I work full time and am compliant with US tax filing thanks to an accountant. How can I file without the accountant this year? Well, You can certainly file through my expat taxes. They tend to be one of the cheaper expat compliant tax filing services. Depending on the cost of the accountant, though, I found that it can be better to go with them. My expat taxes, although it is fairly robust, it is, and I am one of their preferred partners. If you look at the My Expat Invest, they certainly utilize my services for some of their clients. However, it's going to be depending on your complexity of the situation, particularly if you're self-employed. It will probably make sense to still be working with an accountant. Strategy for IRA/401k extractions and reinvestment into something accessible both in the EU and US. Actually, let me jump to one other question here as I just saw it come in. And since it's something that we just spoke about, my understanding is that residency is considered self-dealing by US IRS. So SDIRA puts you at risk of severe audit prohibited transaction under 26 code, US code 49575. That is not true. It used to be. So it used to be true in that the Portuguese golden visa would be a property that you would buy. Now, if you moved into that property, and this is still true with other EU countries, right? Greece is a great example. So if you moved into that property that your self-directed IRA owned, that would be self-dealing and is prohibited. And you could get taxed on the distribution of that essentially. However, with the funds that are currently the best option under the Portuguese golden visa, that is not considered self-dealing. So uh, thank you, Tara, for that question, as it is specific, right, to Italy has private equity funds as well that you can use for their golden visa, and Portugal is almost exclusively funds is what we typically see, and so that's certainly a big one. Sorry, I'm going to go back to my previous question here. I have a few more before we should probably call it, but happy again to meet with anyone for one-on-one consultations to make sure that we get your particular questions answered if I'm not able to get to them in the meantime. Strategy for IRA 401k extractions and reinvestment into something accessible in both the EU and US. Well, I spoke about this a little bit with the self-directed IRA as far as being able to still keep those structures if or if you're going to be liquidating your IRA or 401k. Let's not do it all in the same tax year. Let's at least break it into multiple tax years to be just the most tax efficient. Stay under some of those the higher progressive tax rates. But there's certainly options that even the IRA 401k is still going to be accessible while you're in the EU, and vice versa, right? Any investments that we move over into the EU will still be accessible if you're moving back to the US. And so it's not that it's not accessible one place or the other. It's just making sure that what's most accessible to you. Could use clarity regarding why Vanguard is not a good option for moving overseas. I also have money in a nationwide 457B. Vanguard isn't necessarily a good option, just as if you're using an advisor there, they are not going to allow you to continue using that advisor with an overseas address. They can also potentially freeze your account and close that, which can have some problems down the road, particularly if they're closing a retirement account and liquidating those funds. So certainly a nationwide, right, the 457B They will actually won't close that, but you're just limited with options. So depending on the country that you're moving to, you might not necessarily need that 457B, and we can move that into a traditional IRA to open up the investment world with options. Um, Really a similar question. I have heard that one cannot keep bank, Vanguard, Fidelity, and some people have mail go to family in US, but won't have anyone, and then it got cut off. But yeah, using some of these mail services, first of all, working at both Morgan Stanley and JP Morgan, they knew the mail service addresses. It pops up in the system, and it creates a red flag on your account. So, and more common is to actually have um, requests for proof of residency. And so that's something that we're seeing over and over with different firms, particularly since the crackdown at Morgan Stanley last year around this time. And so it's really been a big hot button topic for these huge institutions, that they need to make sure that the address they have on file is truly their client's primary residence. And so that's really where these firms, who don't work with people who are living abroad, it can cause issues. And so that's where it always makes sense to be transparent with your financial institution and make sure that they know where you're living, and that you're going to be working with someone who can continue working with you as you make that move. Can I switch to from a D7 to Golden Visa when we are already 95% completed? We would do investment and fund. Potentially, if you don't have that residency card, if you haven't made the move, there might still be time. Particularly, yeah, I would say that would be a good one, to go ahead and book directly in with Jason to get that particular question answered, and potentially to start that Golden Visa process before this change gets made, from 5 to 10 years. Um, Investment, I tackled this one a few times. Investment IRA accounts, whether to liquidate or keep US address for continued earnings. I would say, again, be transparent with your financial institution. Let's go ahead and set up a IRA and a brokerage account for you and use your new European address. I think I just answered that question as well, where banks as well as brokerages closing US citizens accounts. Um, yes, I mean that's most. I won't say every single bank, right? There are certainly banks out there who are able to use foreign addresses, but many aren't. Chase Bank is a great example. Wells Fargo is a great example, who aren't able to use foreign addresses unless I believe the limit is 10 million with the firm. So if you have 10 million with those institutions, then you can typically use their private banking services, which does allow for most European countries. All right, guys. I think that is all the questions that I can answer. Well, one last one. You have a tax partner in Portugal? We certainly do. We work with 3 different firms. Please go ahead and reach out. Happy to make the introduction. Okay. Have a good night.